Good morning. I wanted to do a quick overview of the different mortgages for you so that you had this guide to take with you anywhere you are and so you quickly know them, okay? So know enough to be dangerous and always have a lender on speed dial, okay? Number one, FHA. FHA is 3.5% down, first-time home buyer program. They will have mortgage insurance throughout the life of the mortgage, okay? So 3.5% down, first-time home buyers. The home has to be in pretty darn good condition. There can't be chipping paint, missing railings. There has to be working heating. There has to be a working sewage system, running plumbing, good electrical, okay? So that's FHA. Next one is VA, Veterans Housing, okay? Also, that is a government insured program, and it's 100% financing for our veterans. So thank you to our veterans. They deserve that. There's no mortgage insurance on here. VA is the best financing you get. 100% financing and very low down payment. A lot of times there's not a ton with the deposit. $1,000, $2,000, $3,000, all pretty normal unless you're in the upper price ranges, okay? So that's what to know about VA. Same thing with the appraisal. There has to be a safety. It has to be a safe home. The next one would be conventional. Now, conventional is pretty cool, right? There's many different options depending on the bank. You can get conventional financing as low as 3%, 5%, 10%, and then of course there's 20%, and then there's the investment end, which is at least 25%. Right now, let's talk about the 3, the 5, and the 10%. Pretty cool program, okay? You do have to pay mortgage insurance. However, your buyer's only going to be paying mortgage insurance until they own at least a 20% equity position in the home, just as like they were putting 20% down. So let's say if they put 5% today and the market escalates another 15% by the end of this year, now they have 20% and they can get rid of their mortgage insurance, okay? Talk with a broker, mortgage broker, or a banker for more information on that. Now, a lot of times the 10% or 20% buyer with conventional is putting down a lot more money, okay? As far as a deposit, they can make a more aggressive offer. Their financing is pretty preferable, okay? And people like to see that. So that's good stuff. The appraiser's not going to go in and pick out health and safety items. They really, it's different, okay, than FHA and VA. Now, another one you need to know about, which is very uncommon, but is still an awesome option for your clients, especially if they're not first-time home buyers or veterans, it's USDA. So USDA financing is 100% financing, okay? As far as mortgage insurance goes, I do believe there is mortgage insurance on there. I'm not sure if it kicks off after you own 20%. You're going to want to talk with a banker about that. Again, know enough to be dangerous. Now, these people can go buy rural land with this, okay? So speaking, like, let's just say if you're in Rhode Island. I know you can use this all over the country, but in Rhode Island, it's everything pretty much west of 295, south and west of 295. As long as it's large rural areas, you can get 100% financing, which is pretty darn cool, okay? Probably a lower down payment on there, and again, you're going to want to check with a banker about the appraisal process and what is needed. I do believe it can't have chipping paint and all of those other things. Now, there is also Rhode Island Housing in Rhode Island, which is another 100% financing option. And the way this works is it's actually an FHA loan, okay? And Rhode Island Housing gives a silent second loan, and you're paying that off, okay? Those buyers are also going to need closing cost credits. Rhode Island Housing offers a closing cost credit program so they can actually take out 3 mortgages in one. I know it sounds crazy, but it offers an opportunity like nothing else to first-time home buyers. Literally, you could tell people 0 cash out of pocket. I mean, they will have to put some skin in the game. They'll have to put at least $1,000 deposit down, and of course, they got to pay for inspections, appraisal, all that other stuff. But they can actually get reimbursed for that through closing costs. Okay, we can talk about that again later. And then finally, there's some other cool programs like 203K. Now, a 203K is a renovation loan that you can use through FHA, and basically, let's say if you buy a home for $200,000 and there's $35,000 worth of repairs needed. If it has to, say, get a new roof, a new kitchen, anything like that, well, the streamlined 203K allows you to mortgage up to $35,000 on top of that, and the bank will pay the contractors as they go and they finish the work. That's an awesome option. There is another option to add more than that that's not as streamlined. You can borrow as high as the home will appraise and as high as once the repairs are done, and as high as you will get approved for. So that's my quick guide to the mortgages you need to know about out there in the field. Thank you.